Welcome to Markets Now. I'm Michelle Rourke with Brian Doherty with Total Farm Marketing, and kind of a mixed close in the grain trade on Friday. Livestock futures leaning mostly higher, except for a few of the live cattle contracts. Some of the back months in the milk futures were higher as well. Let's unpack this, Brian, and start off with the corn market because we did have a chart breakout here today with March corn getting above and closing above the 435 level. How encouraging is that to you technically?
Yeah, it's pretty encouraging. There's a couple of key things that we'd like to look for. One is, do we get above key moving averages? And we've been sort of flatlining corn for so long that those moving averages kind of flatten out. But once we get above them, that's encouraging. But other encouraging aspects are really good export sales again this past week, year to date, running almost 33% ahead of a year ago at this same time. Farmers selling generally light. Probably the big wet rag over the market is just not enough weather concern out of the southern hemisphere to get bulls really engaged for end users to be buying. But one thing I want to point out on D's 25 corn contract, you got a long-term double bottom established this week with a daily bullish key reversal yesterday, follow through today. That's an encouraging sign. Same thing in wheat, big double bottom on the chart. So if the traders that want to own something, or if the managed money wants to own something that's relatively cheap going into the winter months, I think they're going to take a hard look at the markets here. I wouldn't be surprised too, end of the year, if we see some money come out of equities and look for low price commodities to invest in.
We did have higher weekly closes in the corn. You mentioned that we could have a little bit of an upside, but how much do you have before you start getting some farmers selling?
Yeah, so the farmer selling will be based now off of the March contract, or we'll at least use that as our target point there. So March today closed at 440, and when you look at weekly charts, where's the next resistance area? It's right in that 448 to 450 area. There's a whole list of different things. You got Bollinger Band up there, you've got resistance up there. You've got the mindset of farmers selling. We're also seeing some basis pops in parts of the country that'll probably pull corn into the pipeline. Without some sort of other catalyst out there, despite what will probably be a steady or supportive USDA report next week, the likelihood of a big push here just isn't quite as likely as maybe we've seen in past years, and that's because the general consensus is that farmers have good quality corn. They need to start to move it sooner than later. Cash flow requirements, interest rate costs, storage costs, hedge to arrive contracts that have a due dates coming. All of these all kind of merge here at the end of the year.
Yeah, and you mentioned the fact that we've had good demand. Okay, exports are running like 33% above last year's totals. So, will USDA make any adjustments in the WASD on Tuesday? And will it be enough to pull us below 1.9 on the ending stocks?
Well, we think they will, and we think they'll make adjustments to both ethanol and then exports. And when you combine the two together, you're probably talking around 25 million bushels each. The average pre-report estimate that we're currently looking at for the report is carry out at 1.887 billion, so under 1.9. And so that's a long term, that's a supportive number. It's not necessarily a bullish number, it's a supportive number. And the reason it's supportive is simply that if we go back, remember 4 months ago, there was talk of 2.3, 2.4, maybe at 2.5. All of a sudden, we're at 1.9 or less. So it's a comfortable number, but it's not a number that's large enough that if South America were to have any kind of weather issues, or we talk about weather here in the US or some other supply disruption, the market will likely buy corn pretty quick. The problem is, I don't have any of that today in the forecast. So I think you've got a limited rally in front of the corn market at this point.
That is true of the soybeans as well, though, is it not? That
May-
same limiting factor?
Maybe more so, right? Because Brazil was, if you let's go back 2 months, really dry, got behind on planting, and then when the rains came, they went gangbusters, caught up on planting. They're about done with planting now. Actually, going to get ready to harvest some beans starting in January. It's a big geographical area, so you've got not only this idea of impending harvest, but you've got this idea of more acres, and we've seen the private estimates continue to edge upward. The USDA is 169 million metric tons. There's a few now that are edging over 170. That's a lot of crop and a lot of bushels that the market has to fight through unless those numbers change. And it's not likely the market's going to fight through that. Unfortunately, we're probably range bound to lower in the bean complex. Rallies will be viewed as opportunities for farmers to lighten the load.
No doubt. We did have a higher weekly close though this week in soybeans, and I think that actually makes 2 weeks in a row. So the fact that we've actually been able to hold this market together in light of possible tariffs, in light of a record South American crop, seems encouraging. But how long can we hold?
Yeah, so we're at that time of the year where correct. How long can we hold? And I think when you look at it in totality, the South American sort of production cycle, the weather that really matters is right now, mid-December. I always argue that December 15th is like June 15th in the US. Kind of all bets are off. So it could be that traders want to be really careful after this pullback in beans here in the last month to not get too far over their skis and try to sell this too hard because weather can quickly change or turn in South America. But ultimately, you have to take a step back and go, well, what if it doesn't? If it doesn't, the bean market just doesn't have a lot of big, energy underneath it when you talk about record supplies, world record carry out, world record stocks to usage. Those are limiting factors, and that's just the reality of where we are right now. But stay tuned. We're just entering that weather market. So strategy will probably outweigh outlook in this case.
Yeah, and we've had pretty strong demand, or at least improving demand on the export front. But will that shut off right after the first of the year when the president is inaugurated if we are fearful of tariffs?
Yeah, so that's what people are concerned about here. We had 85 million bushels this week, just a stellar week. And you look at year-to-date sales, 1.330 billion. Okay, let's make that relative to something. So let's look at last year, 1.86. So we're about 114, 115 million bushels ahead of last year at this same time. These are pretty good numbers on the books right now. The worry is that as we get into January, if the South American crop looks good, if prices loosen up, that there could be some cancellations. I'd be speculating if I felt I knew that for sure. But there is that concern, and then there's this whole new administration concern. And will there be tariffs? Will there not? Will Trump push that envelope, or is it just more of a bargaining tool right now? I would continue to argue that for China, anybody else who buys soybeans, they're a good priced product. So how much cheaper can they get that they won't continue to buy? I think that's why the export market has been running better than expected. They're just a cheaply priced product relative to the cost of growing soybeans. Look at farmers looking ahead to next year. They're underwater in soybeans. There's not a lot of incentive to want to grow soybeans at this point.
Yeah. Let's talk about the wheat market. You mentioned the double bottom there, the reversal off the contract lows. But do you think we put a bottom in that market?
Wheat has been one of those markets that's bitterly disappointing, right? But we do have a double bottom on long-term charts. Very impressive this week. Good turnaround, pretty good closes the last 3 days. Probably the big news this week in wheat is that you've got a technical double bottom on the heels of 37% of the Russian wheat crop rated as poor. That's a lot of poor in Russia. They're the wet rag over the market the last 3 years and the 800-pound gorilla. So unless their crop makes a big turnaround, I think ultimately the exportable wheat, that is countries that export wheat, remains pretty thin and not a lot of room for error. So there again, wheat is a good bargain from an end user perspective. But presently, there hasn't been a rush to get it bought, in particular with the US dollar rallying the last 3 months. It's been a little bit more challenging for the US to sell, and consequently, right about when the dollar started to rally is when wheat prices peaked.
Yeah, and you've even got Russia continuing to raise their export tax, and that's really failed to move the market even.
Sometimes you get these things and they fail to move and fail to move and fail to move. And I don't want to give anybody false hope here, but then all of a sudden it's like stretching a rubber band. Then it breaks and everything goes real fast at once. And you can look back and go, wow, double bottom technical, poor conditions in Russia's crop. The aforementioned or what you just mentioned as far as their quotas, and then other countries quickly jump in to get what they can get while the getting's good. So
Yeah.
I don't want to, get too bulled up on wheat, but there's certainly some things starting to mount there that could lead to some recovery in price, including lack of interest by farmers to sell wheat at this level.
Cattle market, feeders closed higher here on Friday, but kind of mixed over in the live cattle futures despite higher boxes at noon and some 190, I think, to 192 cash trade. Boy, that seems disappointing to me. Are you concerned about the lack of, I guess, response to that higher cash? or is it hangover from the technical action yesterday?
Well, yesterday's a pretty tough technical day, and I think it's hangover. Now, what's supporting the market is, as you said, well, all of a sudden we saw these choice cuts pick up $4, and it looks like cash finally trades and confirms higher for the week. But it also looks to me like the board is already kind of beyond this week and looking out and going, okay, can we sustain demand at these levels? You're entering a time of the year where I get very concerned. I'm not concerned from the supply side so much on cattle. I'm concerned from the demand side. You've got property taxes due from, everybody who owns a home. You've got Christmas. You've got credit cards bill due. You got the heating season ramping up. It's been cold the last week. So money being spent by consumers is going to continually sort of ramp up here. And with, in theory, huge credit card debt and 60% living paycheck to paycheck, it's just harder and harder for me to get too wound up about 190 plus cattle prices. That being said, it's still supply driven, but the market may have played its hand this week. That is, the market may be signaling that they just don't expect demand to hold up.
And the milk market, we have had a nice up week here, a nice weekly reversal. Do you think it will hold? Can we build on it and put the low in the back or the rear view mirror?
I think it should hold. So in November, the last production report, we saw more cows come into the pipeline, right? So we're seeing a little bit more production, but the market was already ahead of that. We saw some real slump in cheese products and butter, but whey has held in pretty well. Really nice reversals this week on the charts. Good technical activity, and more importantly, cheese prices have gotten to a level where they should, and historically have really saw some market clearing forces come in and take advantage of a good setback there. When I look at the overall cheese complex and where blocks and barrels they picked up this week, they're still not high enough to justify where necessarily the futures market is right now. But it looks like that trend has probably turned. And we've seen this before where the cheese markets get weaker and weaker and weaker. And you wonder why the processors aren't buying hand over fist. And all of a sudden, you get enough time and up the market goes. And I think we saw the start of that this week. To end the week, we saw some really good advances. We saw 4 3/4 cents in the barrels and 3.5 cents in the blocks. Nice moves. You got whey prices near their contract highs, and we're starting to see butter get a little bit of traction too after it posted contract lows here last week.
All right. Thanks for your analysis. As always, Brian Doherty with Total Farm Marketing. And that's Markets Down.